All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Friday night, August 21st, 2023. Start with the usual swing trade portfolio. These are all on 30 minutes. Start with the mighty Alcoa. And Hulk Smash. Yesterday we took the short at the PSAR flip and it rolled over. We took our standard risk box. It closed well for us. It gapped down and started selling off, so we took a second position. Started selling off. We took a third position. It rounded off nicely. Came to the edge of the dragon. Cash for 1, 2, 3, 4, 5, 6, 7 R on the first one. 1, 2, 3. 3 on the second one. 1 on the third one. That's 11 R in 2 days. No overnight risk. No weekend risk. Let's look at the other metals. This is why I pay attention to the metals. So this was Cliff. I was hyper on Alcoa. Cliff was just an orderly exit on the PSAR flip and rollover yesterday, and it just flowed nicely into this, and I'm still holding that one, and that one's up +4 and shows every sign of failing more. That could have been a lot more, but I didn't want too much on the metals. I like to pick one and smash it. And that's why U.S. Steel, kind of the same boat yesterday on the rollover. Notice that entire sector moved exactly the same way. Short, standard risk, closed poorly, gapped down, sold off, rolled up gently, exiting at the edge of the dragon for 1, 2, 3, 4, 5, 6, 7. So that's +7. So that's 11, 4, and 7. That's 22 R in 2 days on 3 symbols, all in the same sector, that are rolling over at precisely where you would expect with a COTA 2 entry. 30-minute swing trading is the secret sauce right now. If you're not doing that, I don't know why. All right, AI, the software company. So we tried that long. It micro gained. It gapped down and broke the collapsing dragon. We got short yesterday at the usual. It closed here. It opened and continued to sell off. On this little recovery early in the day, it went winter to spring, and it was the edge, and it was like, you know what? I'll just take +4 and have no overnight risk. Because I think Elon Musk is always ready to buy that one when it's on sale. Caterpillar, no trade. CVS, routine short yesterday. On the gap down, it came to the peak. It hit that like a wall and started to roll over. So that's when we pounce. That is a pocket entry. Now, why is that a pocket entry, you ask? Oh, because it's got a lower high, and it rejected the routine resistance, and before it hits this for a collapsing dragon, there's like a little triangle in here where everything is quiet and hesitant, and you don't get slung around a lot in there. It hasn't started the collapse. It didn't collapse till it broke through the collapsing dragon and did this, but you got very orderly entries inside the pocket, which is why we like to front run the collapsing dragon. That gave us +1 in a very orderly trade and no overnight risk. The pocket entry on a short side COTA 2. Dish Network, no trade. Devon Energy, no trade. This is Electronic Arts, no trade. Yesterday we cashed that little win in emerging markets because I didn't want the overnight risk, so I missed this and missed the sell-off. So I left on the table about one, two, three, four, five initial additional R. This looks promising as a zero state for next week. So sometimes that decision not to take that overnight risk, there's an opportunity cost here. But we've also seen just this week what it's like to be on the wrong side of that. So that bothers me not at all. This is why you might want to be interested in trading ETH directly. This is ETHE, the exchange traded note that you can only go long on. So while this was making an orderly sell-off in ETHE that we could not short, you can short ETH/USD in the usual way, just like any other currency pair. And that was such a reliable trade that people that are trading the digital coins, cryptos directly, were very glad of that. Mexico, no trade. Brazil, no trade. Intel, no trade, but it is setting up beautifully here. This was an opportunity for it to collapse. It did not collapse. It did not recover, so that makes this a compound critical state because nobody knows what it's going to do. And therefore, when it starts to do something, you can expect a large move in either direction for a very small unit of risk. Perfect compound critical state that is central to the sniper mentality. International paper, we took the intraday gift on a collapsing dragon, short, standard risk, 2R, and go home. IYR, no trade. This is the small cap regional banks. This was a COTA 2 short today, standard risk. It closed poorly, and I'm not surprised to see it go to here, down to 42 next week. So that's how we find these different price and support levels. You just go to the peak of the RL10. That tells you the statistically significant price level at which it could not fail any further, and the buyers started coming in. And so until proven otherwise, we have every reason to believe it can get here, but then that would trigger the buyers again. So that's the hypothesis. Change my mind with evidence. So we just set it up with, it's not a prediction, it's just a description of the existing context. McDonald's, I'm still in this one until the death. And this closed pretty well. So it's 2 entries, long-term keeper, all-time high it's pushing to. Love it. Merck got the, held my nose and took the PSAR flip yesterday at the close. If you were listening, you would have heard how much I hated that entry. That's why I take it. And it closed well. And that's holding +2. And it's going to test this support level, and if it gets out of this range, up and away. But where should my stop be, you ask? Right here. Underneath that, right there, or right here. No lower than that. You got to give it some room to breathe so it has a chance to get through. But if you give it more room than that, you're just eating away at all the gains that you made. So just take that as the reasonable trade-off. You're giving it that much room, and you're protecting against 3R loss back to where it's all started from. So you're risking 1, but preserving 3. That's a 3-to-1 inverse reward to risk ratio. Marijuana. Now here's one for you. So we had 2 days ago this one, the COTA 2, and it failed. And then yesterday, on the failure, we simply stopped and reversed, and it closed well to here. And then today, it monkeyed around and got to this point. And now, as the yellow dot, I'm going to ask you, if you're holding that trade, and you're holding this portfolio, what are you going to do? Are you going to buy, hold, or sell more? So, in other words, are you going to cover and get out of the trade? Are you just going to tighten your stop and let it ride? Or are you going to add another position? Commit to it in writing in the room. I'll tell you what I did. Not that I'm right, I'm just going to tell you what I did. So that's what I did. I added a position. And the reason for it is it's a Godzilla. And although it's stabilized momentarily, there was absolutely no buying pressure on this whatsoever. And it's still in the Red River, and it's on the border of getting ready to go south. So I can put a tight stop here anyway. So if next week it starts to come out of here, then all right. But meanwhile, I got 1, 2, 3, almost 4R in hand, and this thing is the worst symbol in our tactical set, and it closed poorly. That's one that could very easily gap down. What's it look like on a larger scale? You might wonder. I mean, there's no worse chart than that. You know, stoners of the world, you know, assemble. So that's when I took the risk on. There's no correct answer, but that was my answer. Clean Energy covered the short from yesterday. Rivian covered the short. Treasuries, I missed the PSAR flip and sell off. Tesla, this I should have gotten long on this one. I just feel like this was such a nice tight compression box, and it flipped here and hasn't threatened that. And I feel like I could have at the close just speculated and gotten that entry and just put a tight stop either here or all the way back to here. You decide how far you want to let it go. But I would go right here, and then if that failed, if it failed through here, I'd be short there on a COTA 2, and I would add a second position if it fell through here. And then that way, this is just free and clear. And if it just gets halfway up the stack, it'll get to here. And if it just goes to test the gap, it'll get to there. So that was one that I thought very strongly about taking, and I didn't take it. Yeah, the Red River, Greg points out, when we look at the Red River, it's gone to a, kind of a straight horizontal. It started getting wider and sloping down. It reached peak sell-off here when winter became spring, and that's been a real grind into the Red River, across the Red River, out of the Red River, and that's what you get when it has no further fail. That's why I feel like I could have made that play. If I'd been short up in here, which I could have been, then you're happy about this. And then as this sells off and then starts to flatten out, when the winter turns to spring, is about where you want to think about preserving capital. And then we already saw U.S. Steel. So that's the swing portfolio. Pretty happy with that. I got to total up the last two. I owe you a 2-month report on that now. This is the third month that we've been doing. That's almost 12 weeks of nightly portfolio management on how to trade with the 30-minute bars. Let's go to sniper trade of the day. This is Alcoa because why not? So now we're on the tactical time frame, 3 minutes. Here was yesterday's poor close. Here was the gap down. Here was the OR3. About 3 more bars into it, it breaks out to the downside. And we put the standard risk on it. Check or hold. A micro gain and then an immediate re-entry when it failed. Collapsing dragon. Second position on the second collapsing dragon. Cover on the PSAR flip, stop and reverse. Micro loss, stop and reverse, go short. Micro loss, stop and reverse, go long. Scratch. Kata 2 long. Micro gain, end of the day. So all the goodness was up in here in the early section. So this is about 0.5. This one is 1, 2, 3, and 1. So this is 4. That's minus a half, minus a half, minus a half. So now we are net 3 here. And then that's about plus 1. So we net 4 for the day on Alcoa. If you don't post your charts in the room, then I can't coach it. So there's free chicken just waiting for you. My brother likes free chicken. He posted a chart. This is out of the sideways quiet. It gaps down, starts selling off, moves the risk box, so he's short. It doesn't go to the 2-hour battle drill, but starts to reverse up, so he crashes 1.2. It hits the edge of the dragon and starts to fail, so he reshorts. 2-hour battle drill automatic. It starts to roll up. He recovers. Total of 3. So he nets 4.2 here. Takes a leisurely lunch. PSAR flips. Enters. And now holding one position overnight with about 0.5 in hand. And he's holding because he notices that there is a good strong separation from the Red River. And the reason that happens is because this was so strong, the Red River actually gets pretty low. And then when it goes sideways, the Red River doesn't really reverse. It simply gets narrower until it starts to go up a little bit. Now you can see the Red River beginning to expand. And there's a good reason for that to continue because the metals are all so harshly oversold. There may just be some buyers on value once people look at this over the weekend and say, oh, I can buy great American companies on sale. And the merry-go-round continues to go around. So don't be surprised when history, if not repeats, at least it rhymes. All right, let's go to the weekend report first. Bullish quiet, strong NDX, favorable with respect to the 200. The risk Z is still favorable. Now, this is a bit of a negative. The ETF2 model went from 8 of the 10 indexes above their 4-month to just 6. So it actually reduces 20% of indicated exposure. So that's a slight weakening of the world market model. The piece, now I want you to notice carefully on this. We've got some Kata 2 action going on. Now notice you get one move, pause, a second leg, pause. Now here, it's either going to go up or down. When it comes down, it goes right back to where the geometry says it should. That is a support level. So if this fails, where can this go to? Well, it can go to the RL270. That's not crazy. It could go to the bottom of the Dragon or the bottom of the RL10. That's also the RL270. So that is a huge magnet. If that fails to be support, then the next leg is down here. So now I've just shown you how to estimate potential reasonable gains in that direction over this period of time. So I could go this far and say, look, it could easily get that far in this much time. It can fall this much in that much time. It might go faster because you'll notice that the sell-offs happen faster than the slow climbs. Why is that? Because price goes up in a stair step, climbing up the stairs, and then jumping out the window. That's what it does. Now, why do I think it could go down? Because it has before from right here, sharply, and if we look at the MACD histogram, the peak, it's right at the peak. It's actually rolled over into the fall. That moved back to here, to the 50% retracement and then the 100%, that is the least surprising move of all. What would be surprising would be if this triple top suddenly reversed and on the basis of no new economic data and no improvement in the economy, that this thing just goes. Critical state, large move in either direction. And what I want you to remember is that this little move up, down, and up really on the next higher time frame is just one leg up. And then this is the pull down. And that's the continuation up. And that's one pullback on the next higher time frame. And that's only getting to here. That's why the question is, in the zero state, is it going to rise or fall? We don't know. This shows you that that last little move is over and it's pausing to wonder. So we just increased uncertainty going into the weekend, which is why you saw me exiting a lot of positions and reducing the number of over the weekends I was holding. The ones I did hold, like marijuana, are ones that are already the worst of the worst. So I don't mind holding that overnight on the short side, because if there is a meltdown, then that would be the least surprising one to get smashed, the one that's already leading the way down. 3-day, 9-day, you'll also notice on this markup that we're right at that previous peak. And the last time it gave an orderly move like that. So if it did this, that's the least surprising move. Least surprising move. Could it go up from here? Yeah, it could. It didn't. It didn't. It did a little bit, but then it didn't. The last, 4 times it was at this price level, it sold harshly. And the average move in terms of price was about like right here. So that's why this is in play, and that's why that is the standard estimate of risk and reward to the downside. So if the downside trade is to here, and I break it into 3 if I want 3-to-1, and so maybe I just say, look, there's my trade frame. If this thing breaks down from here or here, I can get 1, 2. If I get an earlier entry, it might be 1, 2, 3 against 1 unit of risk. Easy. And then if it breaks through this, I certainly want to be long, because then it's going to come all the way back to here and keep going. Now notice where the 9-day is. Let's take a look at that. Whoa. Didn't mean to zoom it that much, but since we're here, so the 9-day, is actually looking better than the 3-day because it still feels like this entire move is still trying to go north, young man. And that's just a little doji at the end. That's not reason to be concerned. But if 412 breaks, look out below. And if that breaks, look way below. Because you have to go all the way back to COVID to find out where that could stop around 350, if memory serves. And it does. The market 150 closed pretty well, all things considered. Nice tight little doji action. It only has this much to go beyond the 150-day high, and then it's free and clear. But if that breaks, it comes to here, possibly to here. And if that breaks, then it's here. And if that breaks, it's here. So you just look back to see where the support levels are that it got to on previous sell-offs. And that's what everybody else is looking at, so don't make it harder than it is. Orderly exit to the week. 30 minutes showed a little bit of just backing and filling and just a little bit of traders trading to each other, but it did not collapse further and finished with a nice little recovery intraday. And it's now poised right at the edge of the zero line. Is it going to become summer and go up and set new recent highs? Or does this roll over and go back into the winter and come back and visit 380? Your guess is better than mine. I'm just going to follow price. BMR portfolios, good week for real estate and staples, very little else. Backing and filling all week. Nothing really new here except to say the staples, the ones that I got 2 out of the 3. JP Morgan completely escaped me. And so we've been exploiting this. That's not bad. Procter & Gamble had a good week. Travelers had a great week in finance. And Home Depot, not bad. Maybe this is the return of Home Depot to superstardom. That's a nice way to start. And when you see how weak it is and how much it's been beaten down, there's plenty of room to recover in that. Somebody needs to set that one up for tomorrow. ETF Max, straightforward and orderly. Yeah, nothing special on that. We'll go to the daily report here quick. Yeah, we've seen those already. Oh, back to the... This is just a word of warning on emerging markets, on both the channeling and overreaction. That thing has gone up and had a nice little pullback and is poised for a recovery. So the fact that that fires green says there's a 2-to-1 back to the 10-day high. So that's a standard play. But we've had 3 days of weakness. I would wait. I wouldn't buy it automatically at the opening. That's what that system says. But if you wanted to fine-tune that, that would be a natural way to use hybrid trading intraday for that. Tale of two cities today. We had some big breakouts. McDonald's and Coke and Procter and Walmart, all the usual suspects, and Disney. Selling a lot of hamburgers down there in Florida. A reasonably large number of auto framers and plenty of swing patterns for the mechanical traders out there to review and to trade. Same kind of story with the ETFs, a handful of mechanical signals, a couple breakouts in staples. Lots of auto framers to choose from. I'll let you read that and set them up. Leading the way with Tesla. and Tesla was in a pinch today. I actually like it at this level. I'm ready to get long again. The eternal optimist, what can I say? And we'll go to the Godzillas. Some really good Godzilla setups in here. In the tactical set, these two stalking ponies, Marijuana and Clean Energy, and VIX has been on there for quite some time. ALB you should go look at to see what a raging Godzilla looks like as compared to MTCH, what a stealthy Godzilla looks like. All right, I think that's everything I want to cover tonight. Just notice again the tale of two cities, if I can say it that way. The haves and the have-nots. So you should know which ones are in. This is all the standard reliables, the staples. That's why I'm holding McDonald's. Look at McDonald's. If you don't hold the McDonald's swing on that chart, then you shouldn't be at trading. All right, that's everything I got for you today. We got swing patterns tomorrow. And making great progress on the Owl Wisdom Group. Dan, I set up your course, so your essay got posted in there. I just upgraded the Rizuku site to Rizuku 2.0 Professional, and that's going to allow me to very easily have unlimited number of assistant teachers, assistant instructors. So as soon as that transition occurs, I can make you the instructor of your own course, and then that's going to give you read access and write access to it. So as you feed me those question and essay parameters, and I send you the outputs, you can take that and chunk it right into and build out lessons and readings and activity plans for whatever you want to do with that course. And if you ever want to sell that course, I'm happy. We can add hosting. We can add the payments. It's already got a payment solution in there, but we can just hook that up so it pays your Stripe account directly. So the long-term vision of that is to expand the number of courses and offerings. I will continue to vet people before I let them do that, but that's how you start doing this, is by getting your readings and materials, and that gives you a place for us to do some mutual work. And then if you ever want anybody to share that, you just give me their emails and I'll get them added to it. Too easy. When you become your own instructor, you can actually invite people to that course by yourself, and that's one of the benefits of being one of the founder services there. So that was a good investment on your part. And oh, by the way, you're going to be able to give scholarships for free access to the OWL group to other people based on the size of your initial commitment. So more details on that as we develop it. Let me see what Yeah, I think that's everything I got. I'm going to give a demo of the Wisdom website tomorrow just to show you guys what is actually in there. I mean, it's astonishing. It really, and we're just beginning to crack the code on it. And hey, Bill, Stephen got the initial basic functionality of the question and answer chatbot for us, so he's able to send people an invite, have them establish their own account. We can give that account an allocation of messages per month, and then that can query the same way that I've been writing these queries, but it lets individuals do that and get the answer back directly without me having to touch it. And I can support 15,000 questions and answers with ChatGPT 3.5 Turbo plus the Koala, which is much better. That's as advanced a Q&A as you can get, except for Chat 4 itself. But 3.5 Turbo is actually really pretty good. So
Are you gonna
Doing a nice job on that for us.
counsel people on how to form their
Project
questions?
Alchemy is the next one where he's going to take all these hundreds of essays that I'm producing, and he's going to put Q&A on top of that consolidated, improved set of documents. So we're getting lead from, the internet has lead. Koala turns it into silver. The essays that we write turn it into gold. When we put the Q&A and Koala on top of our essays, a second round, that's going to become platinum. It's just going to continue to improve and refine our Q&A. So pretty excited about that. All right, I'm continuing to march on the book stuff. I got some more written. I'm just populating those little sections. I think what I'm going to do is I was going to put a bunch of the indicators in there. I think all I'm going to do is save that as the book of tortoise indicators, volume 2 of the, and that way this is volume 1 is psychology, strategies, and some systems, and then we'll leave the indicator. That way we don't try to clutter it up with too many indicators. And the systems that you guys have written up for the book uh, will be self-sufficient. You don't have to know all of our indicators. That's in the other handbook. But the indicators that are used in you, Phil, and Griff, that'll be in the book there, I think. So we'll keep it tightly focused, and that'll reduce the size of that a little bit. Okay. All right. More to follow tomorrow. Ciao for now.
Go for now.